Making money trading forex involves buying and selling currency pairs with the goal of profiting from changes in their exchange rates. The foreign exchange market is highly liquid and operates around the clock, providing numerous opportunities for traders to capitalize on currency fluctuations. To begin, it's essential to understand the basics of forex trading, including how currency pairs work and the factors that influence exchange rates. Major currencies like the dollar, euro, yen, and pound are most commonly traded, often in pairs. Traders make a profit by accurately predicting whether one currency will strengthen or weaken against another. Successful forex trading requires a well-thought-out strategy. Many traders use technical analysis, studying price charts and patterns to anticipate market movements. Others use fundamental analysis, focusing on economic data, interest rates, and geopolitical events that can affect currency values. Risk management is critical in forex trading. Setting stop-loss orders can help protect against unexpected market shifts, while position sizing ensures you don't risk more than you can afford to lose. Using leverage, which allows you to control larger positions with a smaller amount of capital, can amplify profits but also increases risk. With practice, discipline, and a sound strategy, traders can improve their chances of success in the forex market.